Welcome back to the channel. Today we're diving into 7 simple ways you can start making passive income in 2025. Whether you're looking to supplement your current income or achieve financial freedom, these strategies are perfect for you. Now you might be thinking, Graham, what exactly is passive income? Well, it's not about getting rich quick, it's about putting in the work up front to create income streams that require minimal effort to maintain over time. Think of it like planting a tree. You water it, you nurture it, and eventually it starts bearing fruit without you having to constantly tend to it. That's the beauty of passive income. So, if you're ready to start building your own passive income streams and securing your financial future, stick around because we're about to break down 7 incredible methods that can help you achieve your goals. And don't forget to subscribe to this channel for more tips and strategies on achieving financial success. Let's kick things off with real estate crowdfunding, one of my favorite ways to invest in real estate without the hassle of being a landlord. Remember all those headaches I used to deal with when I was managing rental properties? Yeah, crowdfunding eliminates most of those. Platforms like Fundrise and CrowdStreet allow you to pool your money with other investors to purchase shares of large-scale real estate projects like apartment complexes or commercial buildings. You're essentially becoming a fractional owner, but without the traditional responsibilities of property management. Now, the beauty of crowdfunding is the low barrier to entry. Some platforms let you get started with as little as $500, making it accessible to a wider range of investors. Compare that to the hefty down payment you'd need for a traditional rental property. Plus, you get to diversify your portfolio across multiple properties and locations, reducing your overall risk. It's a win-win. You get exposure to the real estate market with significantly less upfront capital and effort. Now, you're probably wondering, Graham, how do I actually make money with real estate crowdfunding? Well, there are 2 main ways: rental income and property appreciation. First, you receive passive income in the form of distributions, which are your share of the rental income generated by the properties you're invested in. These distributions are typically paid out monthly or quarterly, providing you with a consistent stream of cash flow. Second, as the value of the underlying properties appreciates over time, so does the value of your investment. When the property is eventually sold or refinanced, you'll receive your share of the profits, potentially earning a significant return on your initial investment. Of course, like any investment, real estate crowdfunding comes with its own set of risks. Market fluctuations, property management issues, and even platform fees can impact your returns. That's why it's crucial to do your due diligence, research different platforms, and carefully evaluate the specific projects you're considering investing in. Don't just jump in blindly. Next up, let's talk about dividend stocks, another fantastic way to generate passive income. Think of it like this: you own a small piece of a company, and that company shares its profits with you in the form of dividends. It's like getting paid to be a shareholder. Now, not all stocks pay dividends. Companies that are in growth mode often reinvest their profits back into the business. Dividend-paying companies, on the other hand, are typically well-established and have a history of consistent profitability. Think of companies like Coca-Cola, Johnson & Johnson, or Procter & Gamble. These are the types of blue-chip companies that have been paying dividends for decades and are likely to continue doing so in the future. But how do you choose the right dividend stocks? Well, you want to look for companies with a solid track record of dividend payments, a sustainable dividend payout ratio, and a history of dividend growth. And remember, diversification is key. Don't put all your eggs in one basket. Instead, spread your investments across different sectors and industries to minimize risk. One of the most powerful aspects of dividend investing is the potential for compounding. When you reinvest your dividends, you're essentially buying more shares of the company, which in turn generates more dividends. It's like a snowball effect. Over time, even small amounts of money can grow exponentially through the power of compounding. It's how wealth is truly built over the long term. Now, I know some of you might be thinking, Graham, dividends are taxed, right? And you're absolutely correct. However, there are ways to minimize your tax liability. For example, you can hold your dividend-paying stocks in a tax-advantaged account, such as a Roth IRA, where your dividends can grow tax-free. It's all about being smart and strategic with your investments. Remember, dividend investing is a long-term game. It's not about getting rich quick. It's about patiently building wealth over time by owning shares in great companies and letting the power of compounding work its magic. Okay, so we've talked about real estate, crowdfunding, and dividend stocks. Now, let's dive into another interesting avenue, peer-to-peer lending, or P2P for short. It's like cutting out the middleman and connecting directly with borrowers. Platforms like Lending Club make this process easy and accessible. Think about it, extra cash in a savings account, barely keeping up with inflation. With P2P lending, you can lend money and earn a solid interest rate. It's like becoming your own little bank, but less complicated. Now, it's not completely risk-free because no investment is. But with Lending Club, you can see the borrower's credit score and history. Diversify your investments across multiple borrowers to minimize risk. The potential returns compared to savings accounts can be a no-brainer. Always do your research, understand the platform, and start small. Dip your toes in, invest a small portion, and see how it goes. P2P lending could be the perfect way to add another stream of passive income. Now, I know what you're thinking, Graham, what about the risks? And you're right, there are risks with any investment. But with P2P lending, it's all about managing those risks effectively. That's where diversification comes in. Don't put all your eggs in one basket, or in this case, one borrower. Spread your investments across multiple loans, different credit scores, different loan purposes. This way, even if one loan defaults, the impact on your overall portfolio is minimized. It's like a safety net for your investments. Another crucial aspect is understanding the platform's default rates and their recovery process. Lending Club, for example, has been around for a while. They have data on historical defaults. They have mechanisms in place to try and recover funds. This information is crucial when assessing the overall risk involved. And remember, like any investment, start small. Don't just dump a huge chunk of your savings into P2P lending without understanding the ins and outs. Treat it like any other investment. Do your due diligence, understand the risks, and then decide if it's the right fit for you. All right, let's move on to something that has absolutely exploded in popularity recently, and for good reason, creating and selling online courses. You guys know I love real estate, but this is like owning digital real estate. You create it once and it can generate passive income for years to come. Think about it. Everyone has skills, knowledge, or expertise in something. Maybe you're a whiz at photography, maybe you're a coding guru, or maybe you make the best darn sourdough bread in town. Whatever it is, there's an audience out there eager to learn from you. Platforms like Udemy and Teachable make it incredibly easy to structure your course, upload your content, and even market it to a global audience. And the best part, you set the price. You decide how much your knowledge is worth. Of course, creating a high-quality course takes effort. You need to provide value, engage your students, and offer a seamless learning experience. But the potential rewards are huge. You could be looking at a significant stream of passive income, all while sharing your passion with the world. Not bad, right? Now, building a successful online course isn't just about throwing some slides together and calling it a day. You got to treat it like a business. Identify a profitable niche, something people are actively searching for. Do your research, see what's already out there, and figure out how you can offer something unique or better. Next, focus on creating high-quality content, crisp audio, clear video, engaging visuals. Nobody wants to sit through a boring lecture. Make it interactive. Throw in quizzes, downloadable resources, maybe even a community forum where students can connect. Marketing is key. You've got to get the word out there. Leverage social media, content marketing, maybe even run some targeted ads. And don't forget the power of reviews and testimonials. Social proof is huge. A few glowing reviews can convince potential students that your course is worth their time and money. And lastly, always be learning and improving. The online course landscape is constantly evolving. Stay updated on the latest trends, technologies, and teaching methods. The more value you provide, the more successful your online course will be. All right, now let's talk about a way to make money by recommending products and services you actually use and believe in. Affiliate marketing. It's like being a digital word-of-mouth marketer, and it can be a fantastic source of passive income. Basically, you partner with companies and promote their products or services through unique affiliate links. Every time someone clicks your link and makes a purchase, you earn a commission. It's a win-win situation. The company gets a sale, and you get paid for driving that sale. Now, the key here is to be authentic. Don't just promote any random product for a quick buck. Choose products and services that you genuinely use, believe in, and align with your audience. People can spot a fake from a mile away. The beauty of affiliate marketing is that you don't need your own product, you don't need to handle customer service, you don't even need to hold any inventory. It's all about leveraging your existing audience and recommending things you already love. So, you're interested in affiliate marketing, great, but where do you even begin? Well, the first step is to choose the right affiliate programs for you and your audience. There are tons of programs out there, from tech gadgets to fashion to online courses. Do your research, see what aligns with your niche and what your audience would actually be interested in. Look for programs with a good reputation, high commission rates, and reliable tracking systems. You don't want to be left chasing down payments. Platforms like Amazon Associates, Share a Sale, and CJ Affiliate are great places to start. They offer a wide range of products and services to choose from. And don't be afraid to reach out to companies directly, especially if you have a sizable audience in their niche. Once you've chosen your programs, it's all about promoting those affiliate links strategically, integrate them naturally into your content. Whether it's blog posts, social media updates, or even YouTube videos, just be transparent. Let your audience know it's an affiliate link, and always provide genuine value. Remember, building a successful affiliate marketing business takes time and effort, but with the right approach, it can become a lucrative source of passive income, allowing you to earn money while you sleep. Now, if you're someone who enjoys writing or has valuable knowledge to share, writing an ebook could be a great way to generate passive income. Think about it, you write the ebook once, upload it to a platform like Amazon Kindle Direct Publishing, and it can continue to generate sales and royalties for years to come. The work you put in up front can continue to pay off long term. It could be anything from cooking and travel to personal finance or self-improvement. Create high-quality content that provides value to readers. Platforms like Amazon KDP make it easy to upload your book, set your price, and keep a significant portion of each sale as your royalty. Don't underestimate the power of ebooks. Now, I know what you're thinking, Graham. Writing an entire ebook sounds like a lot of work, and yeah, it can be, but it doesn't have to be overwhelming. One tip is to start small. You don't need to write a 500-page novel right off the bat. Focus on creating a concise and valuable resource that addresses a specific problem or topic. Another crucial aspect is marketing. You need to get the word out there. The more visible your book is, the higher your chances of generating passive income. And don't forget about the power of reviews. Encourage your readers to leave honest feedback. Writing an ebook can be a fantastic way to generate passive income. Now let's talk about one of my favorite ways to build long-term wealth and generate passive income: investing in index funds. Index funds are like the low-maintenance, set-it-and-forget-it option of the investing world. They offer a simple way to diversify your portfolio and participate in the growth of the overall stock market. An index fund is a type of mutual fund or ETF that tracks a specific market index like the S&P 500 or Dow Jones. Instead of picking individual stocks, index funds let you invest in a basket of stocks with a single purchase. This diversification reduces the risk of putting all your eggs in one basket. Even if one or two companies underperform, the overall impact is minimized. Index funds are incredibly accessible, even for beginner investors. You can start with relatively small amounts of money through online brokerage accounts. So, how do index funds generate passive income? Well, there are a couple of ways. First, many index funds pay dividends. When companies within the index make a profit, they often distribute a portion of those earnings to shareholders in the form of dividends. As an index fund investor, you get to collect your share of those dividends, which can provide a steady stream of passive income. Second, index funds offer the potential for long-term growth. By tracking the overall stock market, index funds have historically provided solid returns over the long run. While past performance is not indicative of future results, investing in index funds can be a smart way to build wealth gradually over time. And the best part is, index funds are incredibly hands-off. Unlike actively managed funds, where a fund manager is constantly buying and selling stocks, index funds are passively managed. This means lower fees, which can have a significant impact on your returns over the long term. So if you're looking for a simple, low-cost and effective way to invest your money and generate passive income, consider index funds. They offer diversification, potential for growth, and the peace of mind that comes with knowing your investments are working hard for you, even while you sleep. There you have it, 7 simple ways to make passive income in 2025. Remember, building passive income streams takes time and effort, but the rewards can be well worth it. Whether you're writing an ebook, investing in index funds, or exploring other opportunities, the key is to take action and stay consistent. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on personal finance and investing. See you in the next video.